Good day, everyone. Today, I'm about to show you another secret of trading. In this session, I'm going to expose to you what moves the market, how the market moves, and what are the things you need to look for if you want to be a profitable trader. What are the things you need to look for to know when the market is about to move, where it is going to move, and where you can join and when you should join. Like me, I'm a specialist on GBP and I also trade NASDAQ, CFD, NASDAQ, German 30, France 40, and all of them, DEX 30, US 30. But today I want to focus more on GBP USD. Whatever I'm going to teach you here applies to every market condition. If you want to be successful trader, you want to be a successful trader, all you need to know is how does the market move? What moves the market? How does it work? How does things work? You need to understand what is forex. If you don't understand how things work, you will not be able to trade forex. A lot of people can come up with a lot of indicator, market analysis, trend line, a lot of things that this is how markets move. When you see this indicator move like this, when you see this candlestick move like this, you should enter trade. Those are not the things that move markets. Candlestick does not move markets. Indicator does not move markets. Market moves because people see reason why they should participate in the business. Any business that is going to move must have things, juicy things that people are seeing in it that will make them to enter the trade and said, okay, I want to trade today. I'm going because there can be some news release, there can be some economic news release, there can be some pandemic, a lot of things that can happen in the market that will make people to see, okay, I want to enter the trade. But the day you start looking at trading as a business, that's the day you start being a profitable trader. When you don't see it as a business, you can never be profitable. If you are looking for any maybe the best strategy to win in the market, there's no best strategy to win in the market. You should look at the market as a businessman. Let's say, and what are the things that moves the market? Whatever the market, like GBP USD, is a currency. We are trading Great Britain pound against US dollar. And the first thing you should consider, what time does businesses open in London, which is GBP. If you are trading GBP pounds, it is British economy that determines what happens there and American economy. And at what time does businesses open in London? It is 8 GMT. So whatever you are going to do, anytime you want to trade, what time do they start, the business start, and what time do they close? They start by 8 a.m. and close by 5 p.m., which is 17 GMT. They open 8 GMT and closes 17 GMT. So if you are going to be entering trade, you should be looking for your entry by 8 GMT to 15. Anything you are going to do in the market, if you are trading GBP USD, you should be looking at it from 8 GMT to 17 GMT. And like me, who is an expert on time-based analysis, my time-based analysis will not be accurate if I don't handle it as a businessman. If I say by 8 o'clock, I want to buy, I should be able to know what we call depth of market. We call it DOM, depth of market. You should be able to know how many orders are in the market, where potential people are placing their limit orders. Let's go to 15 minutes here. Here, this is 1, 2, 3, 4, 5, 6, 7, 8. 8 GMT. Then you see what is happening in the market currently now. I'm done for today, so I'm not interested in that. I've traded whatever I need to trade today. This is 8 GMT. Before, when you are looking for market, that's depth of the market, you mark the highest where the market closed previous day, and you mark the highest of where you know the market is going up. Mark where the market closed. Where does the market close in GBP yesterday, which is 17 GMT? So let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. So this place, the market still went down. Let's say this is 17 GMT here. This is 17 GMT. Then this one went down. There's another thing that I use for market. The previous day, which is the lowest after 17 GMT, the reason why I put this one here is because this is 17 GMT. The lowest after 17 GMT, I marked the area. And when the market opened 1 GMT, it started moving up. As a businessman, let's say the price of maybe corn is $10 as at 17 GMT. It went back down to $6 to $9. It went back up. So if you are a bank, you have large fund, all these people are retailers. The big banks are closed as at 17 GMT here. So all these ones are retailers that are doing it, which is falls in between Asian session. London businesses in London had closed. Bank, hedge funds, all of them had closed their system. They are no longer participating in this thing. These are all retailers that is moving, and all these things is just accumulations of orders. So when the bank is opening the following day, this is Monday, Tuesday, when the bank is opening, you don't expect the price has gone, the depth of the market around here is this area. You don't expect the bank to start buying from people, retailers, selling from here. The best place you should be expecting the bank to participate in the market is this area. So what is the bank going to do? They know that a lot of people have put their limit order here. If you want to see it very well, let's go to 15 minutes time frame. You will understand what I'm talking about. So the previous day, it closes here. So after London close, you see the market hit this place, people buy. It hit this place, they buy. It hit this place, the place buy. So a lot of people, a lot of orders are here, and this is the depth of the market. This is the depth that the market can go in the next day. This is the depth after London close. So this is also where you should be expecting the market to react. It comes down, it reacted. See the close here. It comes down, it reacted up. It comes down, it reacted up. So you don't expect the bank at 8 a.m. to be buying from here. No. They will need to manipulate the market back to the depth of the market here, liquidate all these limit buying orders, take away all their stop loss, which will be placed around this area before it moves up. Then what moves the market? Let's now go to order flow and market depth of market, where you will understand what moves the market, what moves price, and how price moves. If you don't have this idea, you will think when I see this also can do, that means the market is going up. When I see this candle, that means the market is going down. That's not what moves the market. The market in business, we have bid price, we have ask price. The bid is where people want to buy. At what price? At this price, let's say at this price, we have 50 orders. We have 50 orders. People who are ready to buy. There are 50 orders pending. Pending orders, not which is limit order. That's what moves the market. That's what determines how the market is going to move. And here we have maybe 30. If we have 50 people, 50 contracts here that are ready to buy at this price, and the people who are ready to sell are 30. And here we have 40. What do you think price will do? When this 50 cannot, this one is not enough to cater for this, it will remove this 30, it will liquidate this 30, which is at the price of the market. At this, let's say this is where the price started from. It started at 1.98. Let's say this is the price of corn. The price of corn, we have 30, we have people 50 contract. Let's say a bag of corn. We have people 50 people who are ready to buy 50 bags of corn at this price, and we have somebody who is ready to sell 30 at this price. So these 50 bags, somebody who needs these 50 bags cannot get everything at this price. That means he has to still go to this price to move. After liquidating this 30, after removing this 30, it will be left with 20 here. Then this one already have 40. That means he will need to come down to buy from this person 20. So this one will be left with 20. Then this one will be 0 here. Then from here, initially, when the price was 50, the demand was 50 bags, and this person was having 30 bags. What moves the price is demand and supply. And these are the prices of people who are ready to sell and who are ready to buy. Let me put it back. 50, 30, 40, 10, 20, 10, 50, 17, 70. I'm going to show you how market moves so that you will know it is not, this is the total number of sellers, total number of bags of corn sellers here that they want to sell is 270. And here we don't have anything. Here we have 60, 80, 100, 60, 200, 10. This is the total number of bid. So let's say by 8, let's go back to our chart. By 6 a.m., let's see where the price is. Let's use 1 hour candle. By 6 a.m., 1, 2, 3, 4, 5, 6. This is where the price was. Let's say the price is at this level, 195. And the bank wants to buy. The bank cannot start buying at 185, 195. The bank needs to move the price down to this level. They need to pump in money, take away, buy from all these people who wants to sell. He needs to buy all their bags of corn. Then let's say this is the bank who has maybe 700, who has the capacity to buy 700 bags. He has the capacity to buy 700 bags. As at 6 a.m., he wakes up, he sees the market at this price. When Frankfurt open, which is 7 a.m., they look at the price again. Maybe they see this person that wants to sell is having maybe 30, is having 30 at this price. You don't expect the bank to be moving the price up immediately. Because if the bank starts, let's say the trend started from here, they started selling from 1.91, 1.92, 1.93, 1.94, 1.95. And by 8 a.m., when the bank woke up, you don't expect the banks or hedge fund or big people who has big money, big funds at their disposal to start buying, because the trend is already going up, to start buying at this level. No, that's not good business. You are the one who has the capacity to control the market because you are the one who has the war chest. You have the capacity to buy 700 bags of corn, and the total everything in the market is 257 bags. All you need to do as a bank, let's say these are all retailers. Okay, let me remove this. Let me put it at 20. This is showing us how they manipulate the market and how you should be trading. If you want to be trade, you don't want to be losing your money to the market, because the people who has the large funds are the one controlling the market and the price. It is their demands that moves the price. It is not candlestick. It is not maybe trend line. No. Somebody wakes up at is trading GBP USD by 8 a.m. He woke up, he saw the price has risen, and yesterday, the previous day, the price was at 1.91. And the total people who wants to sell here at this place is 30. All the banks needs to do is to buy from this person, remove this 30. All he needs to do is to buy the 30 bags from this person, buy the 30 bags from this person, buy the 10 bags, buy the 50 bags, buy the 17 bags, buy the 70 bags. What is the total? Mm-hmm. 117. So from his 700 that he has with him, 700 capacity, maybe he has the power to buy 700 bags. He has already bought from the sellers. He has bought 117. 177. The 177, when you minus it from is equal to 700 minus 177. It will still remain 532. So this 532, he can still use it to now to still manipulate the market and still be pressing sell below this level at this price. If we want to attract people that, okay, the price has started going down. Immediately he entered here, the price moved down. Immediately again, because he has filled up all this order, the price moved down again because he has the power. And all these people all the people who have joined here, they started buying, they lose all their money. And if they put their stop loss, let's say some people who put their stop loss here, they put their stop loss at this 199 at price 1.91. What will happen to them? This person knows that, okay, a lot of people will be putting their stop loss there, maybe 1.90. He can move the market back down to at least 180. He can move the market to around 1.75. So people will now be thinking, the market is now going down. Immediately people started joining and be placing sell. All these people that are here, they don't have option than to be selling, to join the sell. They will now be selling at this ridiculous price. And immediately they sell all what is in their pocket. All the people above here, they will now come and queue here and fill all their orders. All these orders, they will move back to this place. They will want to sell it. That's immediately people start joining sell. That, okay, I want to sell all these people, 30, who wants to sell 30 bags, who want to sell 40 bags, who want to sell 10 bags. they will now be selling at this price if they want to make money. So immediately he has taken away all their stop loss. That is stop loss. They will now start selling at that price. That means these people here are buying at lower price. Immediately he has made people to think that the price is now going down. He will now buy all their order again. Let's say this is 207.57. Let's say even if it is 400 that is there, he still has 543. He will now move the price back up to 198. The depth of the market, the height is 198. He knows that the day is going to, maybe maximum is targeting to, before he will sell his product, he's buying at, he doesn't want to buy at this price. He wants to buy at this price and sell at this price. But how will he do it? He has to buy from all these people, everybody. He has to buy from them, bring people to start selling at that price. Then he will now move the price back up. Let's go to the chart. At 8 a.m., where was the price? The price opens here. What do? They move the price down to hit all these orders. Let's go to 15 minutes. You see how many times the place got tested. 1, 2, 3, 4. No, it's not that place. It's here. Okay. At 8 a.m., this is the level. It opens here. At 8 a.m., it opens here. Then it started coming down. So you don't expect the banks to start buying from there. No, you will need to take all these people who have been placing their order because they know that this is the depth of the market. They place their limit order here. There's limit order. All these place their limit order. He will need to buy from them. All these people that are buying, he will sell to them. He will liquidate all their orders, move it down to below this level before it will now be buying. And where was the previous top that is targeting? This is the previous top that is targeting. The first take profit where he will be manipulating the market back is this area. So that's how I trade every day using ordinary market depth of the market, order flow, my time-based analysis, and a lot of things which you will get if you take our mentorship class. There are a lot of things that I factor, but it is very, very wrong for someone, because we don't trade what retailers see. We don't trade candlestick. We don't trade candlestick. We don't trade trend line. What we do, we see the depth, the highest of the previous day. We see the depth after the market close. Then when the bank is waking up around 8 a.m., we expect the bank to move it down before we start entering. And if you now go to 15 minutes, you get your perfect entry. 15 minutes here, you get, or it all closes here, here, here. It went down and it closes up above it. Then here, even if you want to do it, you can enter above this one, which is confirmation that the market is going up. And at what level will you be taking your profit? The height of the highest of the previous day, which is this line that we draw from H1. You see where the market was. This is the place of interest where we'll be getting out. So this is how I analyze my market with. There are a lot of things that we teach and how we do our trading. Like this one, we've already known that this is the height. This is the depth of the market. This is the height where we are expecting the market to react. It went down, it went back up. Whenever it gets to this level, we've already know. That's why you see this drop again. And here now is forming another up. So, and if you are going to get out of the market, anything, immediately you get to 5 p.m. London time, you are out of the market. You don't have any business with the market again. And if you want to know more about how we analyze the market with all these things that we have, that I've been teaching you, you can go back. If I don't trade every day, I don't trade Monday, I don't trade Friday. I trade only on Tuesday, Wednesday, Thursday. And when whatever I'm doing, if I don't see manipulation in the market, I don't trade. That means the people who are ready to move the market, they are not in the market. So when I wake up around 8 GMT and I don't see the market manipulated, I've already known the direction of the market, that the market is going, the price of maybe commodity or anything is going up, but I want to see manipulation to the depth of the market before going up. Minimum to this place or mitigating it, or going down, raid all these stop loss before going up. So if you don't see it, and what moves the market, that's what I've shown you here, is demand and supply. When the supply is lower than the demand, the price will go up. So it shows us how many, what will determine it. Once, when you want to see, okay, is the market going up, you maybe from the news event or market analysis, whatever fundamental analysis that you've seen, that the market is now going up. How will you know it is going up? It is through demand and supply. What is the demand? These are the people who have the power to demand from the market, and there are a lot of tools in the market. Some are free, some are not free, that you use to see the depth of the market, apart from using candlestick. Using candlestick, you can know the height of the market and the depth here. So once you've determined it, when you wake up, you want to see the market going down below that place, or at least that place, before you start buying. You don't just wake up and expect the market to be going up by 8 a.m. and be going up there. That means the bank has not participated in it. And if the bank has not participated in it, you are among the people who put their price at this level, who are expecting the market to come and to start coming up to this place. They want to sell 30 bags of corn for 198. You want to sell 40 bags of corn for 1.97. You want to sell 10 bags of corn for 1.96. Whereas when the banks open, the price was at this level. Whatever the banks will be doing, and all those with big fund, all they need to do is to buy from all these people first. Then you will be forced, because the market will be going down. Once it has bought all the things that these people, the bags of corn that this person has, he has bought this, everything here, has bought everything here. Immediately, all these people, they will drop their price. They will come and join and be still selling. Immediately he bought all this one, they will be forced to sell at this price. All their stop loss got hit. So what they will do, immediately they will manipulate people to be selling. Then they will now buy. They will start buying. And immediately they get to this level, what will they do again? They will now sell. That's exactly what happened here. They manipulated everybody to sell, and they bought. Immediately they got to the height of the previous day, which is the height of the market that they are expecting, they dropped the market again. So they started giving it out. People are now buying. People are now buying. The price is going up. They instigated it again. They manipulated it. The price is going up. Immediately it gets there. What happened again? They sold off. But like me, I have my own target per day. Once I hit my target, I'm out of the market. You can't get everything in the market. What I'm teaching in my our mentorship class, we have our website here, projectcanaan.com. Go to the internet, type www.projectcanaan.com. projectcanaan.com. Once you get there, you can register. You get to your dashboard. You go to learn. We have our beginners class. We teach you basics of forex, how to trade, when to trade, and what to trade. There are a lot of things you need to learn in that place to understand. Our intermediate class, we have time-based analysis, central banks dealers range. That's what is going to tell you how far those hedge fund big banks, how far they can manipulate the market. Like here, if you want to know how far this manipulation can go, that's what we are going to teach you there in that central banks dealers range. And reversals, we are going to tell you when the reversals is going to come, weekly reversals, daily reversals, monthly reversals, everything about reversals, we are going to tell you. And our advanced class, these are the prices. Our advanced class, you get time-based analysis, central banks dealers range, reversal, ICT entries. That's if you want to fine-tune your entries using ICT, like other blocks, mitigation block, all those fair value, many of them, and fundamental analysis, risk management, and sentimental analysis. Then our live class is the last one. We teach the same thing like advanced, but it is live class. All these one are recorded classes, PDF and videos, but this one is live class. Presently, we give 40% discount for all our classes. So for beginners class, you get 40% discount, 40% discount for everything. Throughout this month, you still get 40% discount. So you can mail us, go there, you can buy your course immediately. Our support team will answer you. So this is how we get. If you don't know how price moves, that it is by supply and demand, you will not be able to know how the market moves. It's not by candlesticks, it's not by trend, it's not by trend line, it's not by anything. You just need to know, first thing, what is the depth of the market? When is the market, when is it opening? How are you going to get it? How are you going to refine it? A lot of things like our time-based analysis. I've just given you a tips when to enter the market. We give you everything, full package about time-based analysis, central banks dealers range. That's when you are going to know how far this manipulation can go. It can go down. Then how are you going to take it and participate in the depth, the real depth? How are you going to participate in it? With your central bank's dealers range, you can participate from the beginning of that trend. Like how I entered my trade here, let's say from this place where I put this line, let's say I enter here and I risk 10 pips. This is 10 pips is below. This is 7 pips here. Let's say my stop loss is 10 pips. And how many pips is this? This is 5. So 1 to 5 risk reward ratio. That's the minimum. So you would have got, if you risk 10 pips and you got 50 pips, that's 1 to 5. Is it not a good thing? The following day you get 1 to 5. The next day you get 1 to 5. That's 15% per week. How many banks can give you such interest on your investment? So you need, if you want to learn more, come to our website, register, and we have investment package for those who are not ready to, who don't have enough time to trade. Our monthly package, when you invest, let's say you invest $100, and at the end of the month you want to get your package, you get 5% monthly. You want to be getting your money every month, withdrawing. Or just one time you invest $100, you get your money back with 5%. Our, like 3 months, if you invest $100, you get 7% monthly. It's going to accrue to 122. 6 months, you invest 100, you are going to get 158. 1 year, you invest 100, you are going to get 313. Your interest, you can be getting them every month. Like presently now, like 2 months ago, I used to get minimum of maybe 10% per day, trading only GBP. But presently now, since this summer has started, the liquidity in the market is very low because of the vacation. A lot of businesses or business owner and big traders are on vacation. So all you need to do, if you are not good in trading or you are still in your learning process, you can invest in our company. We deal with trading of anything tradable, like currency pairs, CFDs, and we deal in agriculture. Also, we have many green farm in Africa, in many places and in Africa, and we trade and export commodities. So, and we also project manage a lot of physical engineering projects like green technology, renewable energy, and structural engineering. So a lot of things that we do in our company. But most form, the best thing I want you, even if you don't want to have time to invest in yourself. That's the learning aspect. You go to, we have our Telegram chat, Telegram, and you can email us, or you download our application. Go to your dashboard, download our app, go to home, you download the app. This is our app, mobile app. Presently, we still have only Android app for now. All you need to do is just download it. You will be able to manage your, it's very, very handy and it's easy to use. So from there, you can, it looks exactly like this. It looks like this. You will see your investment. You will see your investment details, referral, and a lot of things. How much you've invested, how much you've gotten back, and everything you will see there like this. Hold on. Payment, how much you've earned, details. I don't want to be opening that. And here you see how much interest you'll be getting per month. Everything is there. So on your mobile app, it's going to put it there for you. And when you click the learn, you see all the classes. And another thing, feature you can get from there, that we do for our people who, if you don't have money to invest now, you don't have money to learn, all you need to do, copy our referral link, share it with your friends. Whatever they pay, let's say somebody even did not invest, he wants to learn. Whatever amount he pay, you get 10% from it automatically. So those are the ways through which you can learn and earn from our system. So here, I think I've been able to do justice to this thing today. I've been exposing a lot of secrets on how to trade. Today, I've taught you about the depth of the market, as you will be able to know when not to enter trade. It's part of our training package, but at least I said I need to give this one out. If you don't see the market, it is very, very dangerous, like this chart I told you. Let's say this is bank coming in at this level. This is bank or hedge fund. They are coming in at this level. You know the time they are going to come in. Whatever the price is, as at that time, don't join. Or when the bank has not come to the market or manipulate the market, it is very, very dangerous to enter the market. Take that from me. You can take that to the market anytime. Everybody above this level where the bank is ready to participate, they are on their own. If you don't see, let's say today, maybe those hedge funds, all of them did not enter market today, you can win. But the day they will enter the market, you've already known the depth of the market. All you need to do is to be waiting for them. Let them do their manipulation. Even if you know that the price is still going to go up, let them finish all their manipulation and see price going up before you start selling, you start buying. But if you don't do that, you just enter the market, you say you want to sell your commodity for so price, you are still going to be forced to sell it for lower price. So the price will now fall. Instead of it to be going up, it will fall. But all you need to do, you need to wait. Let them before you place anything, let them move it downward. Then you join the buy. You'll be able to make profit. But when you are buying from here, they will manipulate the market. You have to liquidate all your profits. Whatever you are holding as at that time, you will liquidate it. If you are with them, then you will be forced to buy at higher price later. So wait for them, let them do their manipulation before you join them. So I believe you would have learned one or two things today. If you want to learn more, join us. We have our Telegram chat. It will be under the description of this video, and many of our videos where we have exposed the hidden secret of trading, many secrets that we've opened to people before, like the preliminary aspect of time-based analysis. We've exposed it before, but today we are exposing what moves the market. It is not indicator, it is not candlestick, it is demand and supply. Who has the pipe detects the tunes. So if you don't know who has the pipe, is the banks, hedge funds, all those people. You need to wait for them, let them manipulate before you join them. You don't have the power to manipulate because you are only having maybe 60, your strength, your buying power is 60 here. Somebody says 20, the closest person is 200, but they come into the market with 700, and everything that is here is 255, so they can manipulate everything. and make people to lose money, then they will now take the market up. That's exactly what happened here. And it happens day to day. At exactly 8 a.m., the market open here. They move the market down below this place, then they now went back up. And they've known the height of the previous day. They stopped there. That's the height of the market there. This is the depth here. This is the height. So they will first of all manipulate down and take the price up before they will now start selling. So, oh, that's exactly what happened here. They manipulate you down, take you up, they will now start selling. So if you want to learn more, you will check the description below this video. Then you can get our link to the website where you get everything. Or even if you don't have money to learn, share it with your friends. You will be able to get commission, accrue, you gather commission for you to learn. You'll be able to have money to learn when you share the referral link. Download the app, the mobile app on your Android. The iOS version will be out this next month, but we only have the Android package for now. So thank you. God bless you. Every details that you need will be on the description box. And from the mobile app, you can chat with our support team. They are ready to answer you at any given time. Thank you. God bless you.